Hey guys, it's Luran here and welcome back to my channel. Now in today's video I'll be going over how I was able to turn $600 into $2,500 in just under 1 week trading Amazon options. Now before I get into today's video, I'd like to wish everyone a happy holidays. Hope you guys had a blast for the holiday season and also wishing you guys a prosperous 2020. Now let's dive right into it, guys. Now there's a couple of terms I'll be mentioning within this video, so I want to go over a couple of brief definitions so that you guys are familiar with what I'm talking about throughout the video. So I'm talking about option trading here in this video, not trading stocks directly. So if you guys are interested in what an option is, please head over to Investopedia. So according to Investopedia, options are financial instruments that are derivatives based on the value of underlying securities such as stocks. So an option contract offers the buyer the opportunity to buy or sell depending on the type of contract they hold. So for example, if you're looking to buy one Amazon stock at the current price that I purchased it back on December 18th, I think the value was $1,790, pardon me, for one Amazon stock. Now I was able to, if you see the contract here, I was able to purchase one call and one put. The one call option cost me $695, and that one call option controlled 100 shares of Amazon. So let's say I was to purchase, if I were to purchase Amazon stock, one Amazon stock, it would have cost me $17.90, and I bought 100 of those Amazon option contract, and it only cost me $690. And also I bought one put, which cost me $470. So that's what just a brief definition of what option is, guys. It's a derivative of the underlying security. So any stock, well, not any stock, some stocks doesn't have option that you can actually trade, but in this case Amazon does provide the ability to trade their options. The strategy that I use here on this trade in particular, it's a straddle. So what is a straddle? According to Investopedia, straddle is a neutral option strategy that involves simultaneously buying both a put option and a call option for the underlying security with the same strike price and the same expiration date. So for me, I bought, let me pull up the window here. I bought one option, one call option, one put option, and I bought them. Let me see here. 1 second, guys. You'll see. So if you look at my Thinkorswim chart here, guys, you'll see that I bought on the 18th of December, I bought Amazon call option at $18.25 strike price, and I bought one put option of Amazon at $17.60 put. You'll see $4.70 and $6.95 respectively for the call and the put. Now, those are the details of the strategy, guys. So let's look at the charts here now. So look at this chart here, guys. So this is Finviz chart. It shows you a markup of Amazon stock. So you can see here Amazon has a nice support here for the whole entire year. You see they have a support here at $1,700. And since July, this stock has been on a decline, just, barreling down towards the 1700s. So I had my eyes on this stock coming into the holiday season because I know Amazon is one of the biggest, online retailer that we're of our times, and I know that this stock will make a big move because if you notice here, since October, the stock is just dragging along. So I know I wanted to put a trade on this stock, but like I mentioned before, guys, I use the straddle strategy to trade this stock, and what the straddle does is, you're assuming that you don't know which direction the stock is going. So listen, I bought the stock right here. If you can see my cursor, right at the 18th of December, when the Amazon stock is trading right on this trend line. And this is a descending triangle, by the way, guys. So usually it's it become a bullish triangle once the stock gets to the apex of the triangle, and it's not quite there as yet, but you can see it's hanging around here You see, got rejected here, got rejected here, and it came right back here. Now, for me, I'm looking at this stock right here. I know if it has bad news, this stock can pull back another $50 easily, which is, you know, it can be less than 3% pullback. Now, a $50 move, that's a move that can produce a lot of funds for anyone trading this stock. And if it has a move up, this was my resistance area at 1850. So I bought, if you see the contract that I bought there, I bought it out of the money, $30 out of the money, and I was hoping for a big move on this this stock. I bought it for the 18th, my strike price, and I was hoping my contract was expiring on the 27th of December. So you can see here on Boxing Day, some great news came out for Amazon. Amazon says holiday shopping broke record this year. Now, for me, I wasn't interested in all the details in terms of how many millions of items or billions they sold. All I just wanted was some news. When you're trading straddle, that's all you want. You want the stock to move. So you see the stock is just, just dragging along here. All I wanted the stock to make a big splash down or a big splash up. Either way, if it makes a big splash up, I'll lose my money on the downside. The put option will be worth zero. As you can see here in this image, this is the snapshot of when I sold my call option. This is my put option. You see 451. Remember I told you earlier that I paid 470. So this is the negatives. I lost this money on the put option. But the call option that I paid $6 for, look here guys, is now worth $36. So just imagine, I bought a call option, one of it, for $6. And on December 26, Boxing Day, when this big news broke about Amazon sales, right? The $6 call option is now worth $36. So 36. So this is almost 600% increase from where I bought it from. And you see there, guys, that $600 turned into $2,500. Now, I don't get to take home or bank the full $2,500. Why? Because I lost $450. Well, the total will be $470 on the put option. So let's less that amount. We're netting $2,000 when we lose that bottom end. But you see what I'm talking about here, guys. Let's say Amazon stock had blasted down because the news were poor that came out for the holiday shopping sale. Let's say Amazon went down. If Amazon went down, then the put option would have increased in value and the call option would have probably gone to zero. But either way, I would have been making money. You see, a lot of people struggle when it comes to trading because they assume or they guess the direction incorrectly. Once they do that, then they lose money. Someone will come here and buy a put option. It's like, okay, this thing is bearish. It's a divergent triangle. It's not yet at the apex of the triangle, so most likely it'll probably go down. Some people might say that, but they don't protect themselves by buying anything on the top. And then let's say the news is bad, the stock goes down. December 27 comes, 2 weeks after they bought the contract, it expires worthless, and then they lose money. But in my strategy here, well, not my strategy, a straddle, it's well-known strategy, but in terms of what strike price to buy and those type of stuff, that's where the technicalities come in. So like I said, guys, I bought this contract $30 out of the money. It was trading at $17.90, and my strike prices, as you'll see here, let's pull this back up. My strike price was $18.25. So it was $17.90 when I bought it, and I was banking that the stock will go above $18.25. And below, it was $17.90, and I was hoping that if it goes lower, it'll go as low as $17.60. And you can't just do this for any stock, guys, because if you don't have enough resistant area above or support area based on the current position of the stock when you bought the contract, then you can get grounded. Let's say the support is right here beneath this level, then you don't have much room for the stock to break below. So the potential to profit is pretty low. Here, I was hoping that the stock can come as low as, let's pull this back up here, guys, as low as this level, 1732, and I bought at 1790. So we're talking $60 move, $60 move if we should look at that level. And above, this was my resistant area, as you can see here, right there at 1853. The stock broke out there on Boxing Day, broke the resistant level, which is my target level, and I got out of the stock right there on Boxing Day. I closed the trade, as you can see here, and banked $2,500 easily, guys. So that's what I wanted to break down in this. I did some rambling there, guys. My apologies. That's what I wanted to break down in this trade. I'll just summarize what I talked about here. So I traded Amazon options. I was able to invest. So I was able to invest, as you can see here, I was able to invest $470 on one put. I invested $695 on one call. I bought a straddle. That's the strategy that I use. So whether the stock went up or the stock went down, I would have still profited. But what had to happen is the stock had to just move significantly in one direction. So when you use a straddle strategy, it removes direction out of the equation. So you don't have to be right about the direction anymore. All you need to make sure is that the stock moves. If the stock doesn't move, then the stock will expire. So come December 27th was the day after, this stock would have expired worthless. You see the expiry date here, December 27th? Yes. This would have expired worthless. So this would have been zero, this would have been zero, and then I would have lost, $1,000, $1,100 or whatever, the summation is for that. So that's what it's all about, guys. But the reason I took the trade, the main reason why I took the trade is because, as I said, Amazon is a big play in this online space. And I know during the Christmas holidays for the past couple of years, Amazon has been very volatile when these type of news break during the holidays. I'm going to look at the month of December. There was no significant news. And also the S&P 500 was soaring during the month of November and December, and Amazon wasn't doing anything while the rest of the stock market was just on fire. So right here, I knew that some type of sales will come out and Amazon will make a big move either to the upside or the downside, and I'll be able to cash in on that. So that's what I bought. That's why I bought a straddle option strategy, and I was able to capitalize big. Now, this can be scaled to any amount, guys. Let's say you had $5,000 here on the top, on the bottom side. You were talking about you 5x your money. 5 5 is 25,000 you'd have made on the upside, if that's the way you were trading that option. So I want to wrap this video up, guys. I'm rambling a little here. And I just want to remind you guys that don't forget to hit the like button, guys. Give me a thumbs up if you like this video. Also, don't forget to hit that subscription button if you're new to the channel. And remember to hit the notification bell so that you can receive new videos as soon as they're posted. So until next time, we'll talk later, guys. Bye. Hey, guys. Hopefully you found this video very helpful and useful. Please remember to hit that subscription button, hit the like button, leave a comment, and hit that notification bell so you can be notified whenever a new episode is dropped on a weekly basis. Thanks for watching.